Hey there, accounting enthusiast. Welcome to my video blog on International Financial Reporting Standards, commonly known as IFRS. I am Victor Hernandez, and I'm thrilled to take you on an enlightening journey through the world of accounting standards. In this blog, we'll delve into the development, evolution, and current status of IFRS, shedding light on its significance in the global financial landscape. IFRS isn't just a set of accounting rules, it's a catalyst that revolutionized how companies across the globe report their financial information. The journey of IFRS dates back to the late 20th century, when the world recognized the necessity for harmonized accounting standards amidst globalization. The aim was clear: to establish a single high-quality set of accounting standards that transcends borders, facilitates transparency, and enhances comparability among financial statements of various organizations worldwide. Over the years, IFRS has seen significant milestones and developments, from the establishment of the International Accounting Standards Committee (IASC) in the 1970s to the creation of the International Accounting Standards Board (IASB) in 2001. The journey has been marked by collaboration, refinement, and the pursuit of accounting excellence on a global scale. So whether you're an accounting student, a professional in the finance world, or simply curious about the backbone of financial reporting, this vlog is for you. Join me as we embark on an exciting exploration of IFRS, unraveling its complexities and unveiling its significance. IFRS represents a set of accounting standards developed by the International Accounting Standards Board (IASB) to provide a common global language for financial reporting. It aims to enhance transparency, comparability, and reliability in financial statements across countries, facilitating international investment and economic growth. As previously mentioned, IFRS stands for International Financial Reporting Standards. These are a set of accounting standards developed by the International Accounting Standards Board (IASB), an independent private sector body. IFRS provides a common global language for business affairs so that company financial statements are understandable and comparable across international boundaries. The goal of IFRS is to bring transparency, accountability, and efficiency to the financial markets worldwide by ensuring that financial reporting is consistent, transparent, and comparable across different countries and industries. IFRS covers various aspects of financial reporting, including how companies should recognize, measure, present, and disclose their financial transactions in their financial statements. The adoption of IFRS can vary by country or region, with many countries either fully adopting IFRS or converging their local accounting standards with IFRS to ensure a higher degree of consistency and comparability in financial reporting globally. The origins of IFRS can be traced back to the efforts of standardizing accounting practices globally. The IFRS Foundation, established in 2001, oversees the IASB, which develops and maintains the standards. The convergence of national accounting standards with IFRS has been an ongoing process, with significant milestones achieved in harmonizing practices worldwide. The development of International Financial Reporting Standards (IFRS) began as a response to the increasing globalization of businesses and financial markets. It aimed to create a unified and harmonized set of accounting standards that could be used globally, improving transparency, comparability, and consistency in financial reporting across countries. Before the establishment of IFRS, different countries had their own accounting standards, which led to inconsistencies and difficulties in comparing financial statements across borders. This lack of comparability hindered investors, analysts, and stakeholders from making informed decisions. In 1973, the IASC was formed as an independent body of the goal of developing global accounting standards. It laid the foundation for the eventual creation of IFRS. Over time, the IASC developed a set of international accounting standards (IAS), which were gradually adopted by various countries. In 2001, the IASC was restructured into the International Accounting Standards Board (IASB), and the standards were renamed as International Financial Reporting Standards or IFRS. The convergence of accounting standards was a significant part of the development of IFRS. The IASB work towards converging IFRS with generally accepted accounting principles, GAAP, used in the United States, aiming to reduce differences and achieve a single set of high-quality global accounting standards. Many countries around the world have either adopted IFRS or have moved towards convergence with these standards. Some countries have fully adopted IFRS as their national accounting standard, while others have converged their local standards with IFRS. The IASB regularly updates and amends the IFRS to address emerging issues aligned with changing business practices and improve the quality of financial reporting. Overall, the development of IFRS represents a significant milestone in global accounting, aiming to enhance transparency, comparability, and consistency in financial reporting across borders, thereby facilitating better decision-making by users of financial statements. IFRS is guided by fundamental principles emphasizing relevance, reliability, comparability, and understandability of financial information. It promotes fair presentation, substance over form, and the accrual basis of accounting, aiming to reflect the economic reality of transactions in financial statements. IFRS is built on principles rather than specific rules. This allows for flexibility in accounting treatments, encouraging the application of professional judgment in reporting financial information. Financial statements prepared under IFRS should present a true and fair view of the company's financial position, performance, and cash flows. Information included in financial statements should be relevant to the decision-making needs of users and reliable, providing a faithful representation and being free from material error. IFRS aims to ensure that financial statements of different companies are comparable across industries, jurisdictions, and periods, allowing investors and other stakeholders to make meaningful comparisons. Consistency in accounting policies and treatment should be maintained over time, unless there is a valid reason or a change in standards requires alteration. Prudence, also known as conservatism, is about exercising caution when making judgments under conditions of uncertainty. It advocates for not overstating assets or profits, ensuring a cautious approach to recognizing revenues and gains. Financial statements should include all necessary information, both in terms of required disclosures and representation of transactions and events, to ensure a comprehensive understanding of the company's financial position. Information is considered material if its omission or misstatement could influence the economic decision of users. IFRS requires that material items are disclosed appropriately. Financial statements are prepared on the assumption that the entity will continue its operations for the foreseeable future unless there is evidence of the contrary. Emphasis is placed on the economic substance of transactions and events rather than merely their legal form. This principle ensures that financial statements reflect the economic reality of transactions. These principles serve as a framework for entities to prepare high-quality financial information that is relevant, reliable, and comparable, aiding investors, creditors, regulators, and other stakeholders in making informed decisions. Over 140 countries either fully adopt or converge with IFRS, including the European Union, Australia, Canada, and many emerging economies. However, the degree of timing of adoption may vary, leading to challenges in achieving uniformity in reporting practices globally. The adoption of IFRS has seen significant progress globally. Many countries and regions around the world have either adopted IFRS or converged their local accounting standards with IFRS. The rationale behind this move is to enhance transparency, comparability, and consistency in financial reporting across borders, facilitating easier understanding and analysis of financial statements by investors, regulators, and other stakeholders. Several factors have contributed to the global adoption of IFRS, the first being standardization and globalization. In an increasingly interconnected global economy, having a common set of accounting standards facilitates cross-border investment, mergers, and acquisitions by providing a common language for financial reporting. The second being investor confidence. IFRS aims to improve the quality and transparency of financial reporting, which helps enhance investor confidence in the reliability and comparability of financial statements. The third being reduced reporting costs. For multinational companies operating in multiple jurisdictions, adopting a single set of accounting standards can reduce the cost associated with preparing multiple sets of financial statements according to different local standards. The fourth being regulatory requirements. Many countries and regions have mandated or encouraged the adoption of IFRS for listed companies or specific sectors to align with international best practices and standards. However, the adoption process has not been uniform across all countries and regions. While some have fully adopted IFRS, others have adopted it with modifications or have converged their local standards with IFRS while retaining some differences. In summary, the global adoption of IFRS has been substantial, driven by the aim of harmonizing accounting practices internationally, despite challenges and variations in adoption approaches. The trend towards a more globally accepted set of accounting standards continues to progress. Despite its widespread adoption, IFRS faces challenges related to complexity, interpretation issues, and the need for consistent application. Critics argue that certain standards lack clarity, and the principles-based approach may lead to diverse interpretations affecting comparability among entities. Like any standardized system, IFRS has faced challenges and criticisms. Some argue that IFRS can be overly complex, as the standards cover a wide range of financial transactions and situations. Their application might involve a considerable amount of judgment, leading to complexity and potential variations in interpretation. Transitioning from local accounting standards to IFRS can be costly, especially for smaller businesses. This includes training staff, updating systems, and ensuring compliance, which can be a significant burden for companies. Critics also point out that IFRS, while providing principle-based guidance, sometimes lacks detailed instructions on how to implement specific accounting treatments. This can result in inconsistencies and different interpretations among companies. Despite the aim to enhance comparability across international boundaries, differences in interpretation and application of IFRS may lead to variations in financial reporting, impacting the ability to compare financial statements of different companies. Additionally, IFRS requires significant judgment in applying standards to transactions. This subjectivity can potentially lead to inconsistencies in reporting, as different companies or even auditors might interpret and apply standards differently. Critics also argue that the principles-based approach of IFRS might create opportunities for manipulation or creative accounting practices, allowing companies to obscure their true financial positions. In some jurisdictions, the enforcement of IFRS might be lax, leading to inconsistencies in application and adherence. Also, there might be differences in how IFRS is interpreted and applied across different countries, despite the aim of creating a globally accepted set of standards. Lastly, as business practices evolve, IFRS requires frequent updates to stay relevant. Keeping up with these changes can be challenging for both preparers of financial statements and regulators. While IFRS aims to standardize financial reporting globally, these challenges and criticisms highlight the complexities and difficulties in achieving complete harmonization and consistent application across diverse jurisdictions and businesses. The IASB regularly updates and revises IFRS to address emerging issues and improve financial reporting quality. The board is actively engaged in various projects, including amendments, new standards, and research initiatives aimed at enhancing the effectiveness and relevance of IFRS. IFRS adoption has been progressively increasing worldwide. Many countries have either fully adopted IFRS or converged their local accounting standards with IFRS. However, the degree of adoption and implementation can vary, with some jurisdictions mandating IFRS for listed companies, while others permit or require its use for specific industries or company sizes. In the context of the United States, the Securities and Exchange Commission allows foreign private issuers to use IFRS for their filings with the SEC. For U.S. domestic users, they are generally required to use generally accepted accounting principles, but there has been some consideration and discussion about potentially adopting IFRS in the future. The future prospects of IFRS are influenced by several factors. As businesses increasingly operate across borders and demand for a common set of accounting standards continue to grow, IFRS serves this purpose by providing a globally accepted framework for financial reporting. The IASB continually works on improving and updating IFRS to address emerging issues and make the standards more robust and relevant to evolving business practices. Regulatory bodies in different countries might consider the benefits and challenges associated with adopting or converging with IFRS. Changes in regulations could impact the future adoption and implementation of IFRS. Advancements in technology are influencing financial reporting practices. IFRS is likely to evolve to accommodate changes in reporting formats and incorporate technological advancements to enhance transparency and efficiency. Investors, analysts, and other stakeholders often prefer transparent, comparable, and reliable financial information. If IFRS continues to meet these expectations, its adoption and use are likely to expand. There may be challenges related to implementation costs, training, and interpretation of standards, especially in jurisdictions where IFRS adoption is relatively recent or undergoing transition. The future prospects of IFRS seem promising considering the ongoing efforts to enhance its relevance and usefulness in the global financial reporting landscape. For those interested in understanding IFRS, it is crucial to stay updated with the latest developments, attend relevant training programs or courses, and consult authoritative sources such as the IASB publications, exposure drafts, and implementation guidance. Embracing continuous learning and engaging in discussions within the accounting community will facilitate a deeper comprehension of IFRS. Here are some recommendations for someone looking to learn more about international financial reporting standards. Visiting the official website of the International Accounting Standards Board, the organization responsible for developing and issuing IFRS, is an important aspect that can be used by those looking to learn more. They offer various publications, standards, and interpretations and updates related to IFRS. The IFRS Foundation website is also a valuable resource for those looking to expand their knowledge. There are numerous textbooks, guides, and study materials available specifically tailored to those looking to learn more about IFRS. Look for well-regarded publications authored by experts in the field to gain a more comprehensive understanding of these international standards. Exploring online platforms that offer courses dedicated to IFRS. Websites like Coursera, edX, and LinkedIn Learning often host courses taught by professionals and experts in international accounting and finance. Joining accounting or finance-related professional organizations that provide resources, workshops, seminars, and conferences on IFRS are also recommended. These organizations offer valuable insights and networking opportunities. Attending these workshops or seminars conducted by accounting firms, educational institutions, or industry experts that focus on IFRS updates, implementation, challenges, and practical applications are also good sources of knowledge. Working through specific case studies and examples that apply IFRS principles to real-world scenarios, this practical approach helps in understanding how IFRS is applied in different situations worldwide. Given that IFRS standards are subject to updates and revisions, staying informed about the latest developments by subscribing to newsletters, blogs, or publications dedicated to IFRS updates are also moves to make. Familiarizing yourself with the conceptual framework underlying IFRS, understanding the principles that guide the development and application of IFRS standards can enhance your comprehension of these standards themselves. Overall, engaging with peers, colleagues, or professionals in the accounting and finance field to discuss IFRS-related topics is also a good move to make. Participating in forums or discussion groups can offer different perspectives and insights. Lastly, applying IFRS principles in practical settings by working on projects or seeking internships or roles in organizations that follow IFRS. Practical exposure often solidifies theoretical knowledge that can be gained through reading and other reading publications and website posts. Remember, understanding IFRS is an ongoing process, and it is essential to stay updated with the latest developments and revisions in the standards. Combining theoretical knowledge with practical application will significantly enhance your understanding of IFRS. In conclusion, the International Financial Reporting Standards have evolved significantly, aiming to harmonize global accounting practices and facilitate transparency and comparability in financial reporting across borders. IFRS has significantly impacted global financial reporting practices, fostering transparency and comparability. Its evolution continues to adapt to changing business environment, aiming to meet the needs of stakeholders worldwide. Understanding the principles, evolution, challenges, and ongoing developments of IFRS is vital for professionals and entities navigating the complexities of international financial reporting. From their inception to their current status, IFRS has undergone continual refinement to adapt to changing business landscapes and regulatory environments. For anyone seeking to delve deeper into the realms of IFRS, it is crucial to grasp its foundation principles, keep abreast of updates and amendments, and understand how these standards impact financial reporting and analysis. Engaging in ongoing education, leveraging resources from authoritative bodies like the International Accounting Standards Board, and staying updated on emerging trends will be pivotal in navigating the complexities of IFRS. Remember, while IFRS aims for global convergence, nuances in application and interpretation may exist across jurisdictions. Hence, seeking expert guidance and fostering a robust understanding of IFRS will be invaluable in ensuring compliance and making informed financial decisions. Stay curious, stay informed, and embrace the evolving landscape of international financial reporting standards. This is Victor Hernandez signing off. The following are my sources used throughout this blog presentation. They are also available in the YouTube video description and in the assignment submission on Blackboard. Once again, thank you for watching this video blog and I appreciate your time.